All right, great. Welcome everybody. My name is Bonnie Holman. I'm Managing Director of SES Consulting Services, and today we are going to be giving a webinar on the evolving sustainability reporting space. So talking about some new kind of mandatory efforts and changes in the voluntary reporting space as well. Thank you for participating in the webinar today. I'm also excited to introduce my co-presenter. I have with me today my colleague Megan Maxson, Sustainability Analyst with SES Consulting Services. Welcome, Megan.
Awesome, thank you, Bonnie. Hi, I'm Megan Maxson. I'm an analyst for SES. My work focuses on supporting companies with their sustainability reporting and climate strategy. Before we begin today's webinar, I'd like to take a moment to update all of our listeners on our event platform, GoToWebinar, and how to engage with the speakers. Yes. To avoid any unnecessary background noises during the presentation, all attendees have been muted, and this will remain a one-way presentation for the duration of the event. If you would like to ask a question, please go to the questions section in the control panel on your upper right-hand side of your webinar console. Once you type your question and hit send, your question will be sent to the panel for review. Depending on the time allotted at the end of the presentation, we will make every effort to answer all questions submitted. Any questions that we are unable to answer will be responded to after the event by a member of the panel. Today's presentation slides, along with a recording of the webinar, will be made available to all registrants and attendees after the conclusion of the webinar. Awesome, we'll just go to our agenda. This is our quick agenda, appropriately full of acronyms that represent the list of sustainability reporting legislation, standards, and frameworks which we'll be covering today. As we talk about the space evolving, the order we'll present the information will be covered first, which is what has happened and what we know is mandatory from a reporting perspective. Second, what is happening and how the current and upcoming year will essentially change the reporting space. And three, what is expected to happen soon, which includes the United States SEC proposed rule. Okay, and then just a brief overview of our services. We were launched in 2021 as the dedicated sustainability consulting business to operate alongside our sister company, SES Global Services, which is a global leader in third-party audits. As such, our business is built on nearly 40 years of leadership in the sustainability sector across all major market sectors. Grown out of our deep expertise in impact-driven market solutions, we guide our clients to achieve their sustainability goals in a rapidly changing climate and business environment. This slide provides a summary of our core services, a main category of which is sustainability reporting, which we will get into in depth today. And then we wanted to give a brief overview of the sustainability landscape and differentiate between standards, frameworks, and rankers and raters. The basic distinction is that standards include requirements, frameworks include guidance and communication platforms, and rankers and raters are users of this information and use it to communicate comparative performance for companies. And with that, we will do our first poll. We are kind of curious which of the following sustainability standards and frameworks you currently report to. So I think we will be launching that poll in just a minute, and we will offer about 30 seconds to answer. Okay, there we go. It should be open now.
Great, I see it open.
Awesome.
Looks like the numbers are changing here, but it looks like GRI is ahead with 40-something%. CDP close behind. We've got 40% voted, so
give it a few more seconds. Awesome. Close it now. Okay. Let's see. So it looks about like 43% are reporting to GRI, 23% are reporting to SASB, 16% to TCFD, and 41% to CDP. So some pretty good representation across the board.
Great.
Okay, great. We kind of just wanted to go over the G7 regulatory commitments. When we think about the evolution of sustainability reporting from voluntary to mandatory, the first venue this transformation has occurred in is in financial markets, where investor demands have led to the development of the Task Force on Climate-Related Financial Disclosures, which is TCFD. A major driver in this space includes the G7, and in June 2021, the G7 countries agreed to move forward within their respective jurisdictions towards mandatory disclosure for climate-related risks. The UK was the first of the G7 economies to make climate-related financial disclosures mandatory for listed companies when the regulations went into effect for the largest listed UK companies in April 2022. The UK regulation was largely based on TCFD, and in July 2023, global securities regulators gave their formal backing to the International Sustainability Standards Board, ISSB, and Britain says it will follow. The UK and EU both have executed on their G7 commitments, while Japan, the United States, and Canada have made progress on proposals and preparations. TCFD is kind of the underpinning of all of these efforts, with ISSB directly underpinning the efforts in the EU, UK, and Japan, while the US and Canada are part of ISSB working groups. Canada has formed the Canadian Sustainability Standards Board, which is the CSSB, to support integration of the ISSB standards in Canada. So this is just some like regulatory background in some major economies. Okay, and so we'll go to our second poll, which is, when do you anticipate that your company, do you anticipate that your company will be required to report under any of these markets? So the EU, the UK, US, Canada, and then potentially unknown.
Great. Great, we've got about 55% voted. Thanks everyone for voting.
Yeah.
Very interesting to see. Okay, it looks like we're at about 30 seconds and 65% voted. I might give it 5 more seconds.
Awesome. Okay, great. So it looks like we have about 43% anticipate to report to the EU, 23% UK, 60% the United States, which is a pretty good majority, and then 26% Canada. So thanks for kind of representing, and we'll be discussing the EU and the USA at length today. And with that, I will hand over the presentation to Bonnie.
Okay, great. Thank you, Megan. Interesting to see 43% of respondents anticipating to report through the EU. So we will actually be covering the European Union first. So the launch of the European Green Deal in 2019 really set in motion a comprehensive governmental approach with specific policies essentially aimed at transitioning the entire European Union economy towards a net zero economy by 2050. The Corporate Sustainability Reporting Directive, which was passed in November 2022 and went into force at the beginning of 2023, can be viewed as just really a monumental shift from voluntary to mandatory and comprehensive ESG reporting. So reporting going beyond climate risk disclosures, going beyond that G7 commitment that we just covered. The CSRD is really the modernization to the non-financial report directive, which was passed in 2014 and has been in force since then. And really, this CSRD replaces the NFRD and will broaden the reporting requirements from roughly 11,700 companies reporting to it today to over 50,000 companies that will need to report to CSRD, in its initial year. Other components of the Green Deal that will interface with CSRD include the EU taxonomy regulation, which has already been in place, the Sustainable Finance Disclosure Regulation, also which has already been in place, and the forthcoming Corporate Sustainability Due Diligence Directive. The CSRD legislation essentially mandated the European Financial Reporting Advisory Group, which we will call EFRAG from here on out, to develop the European Sustainability Reporting Standards, which we will call ESRS. So lots of acronyms today. The ESRS can be viewed as essentially laying out the legal reporting requirements to be compliant with CSRD at the EU level. And I say at the EU level because each country within the EU is tasked to approve the ESRS as it is, or build national level standards upon them. The initial 12 ESRS standards were formally adopted in July 2023, and we'll come back to those in a few minutes, but it's important to note that those will come into force at the beginning of 2024, which will be the first financial year of reporting data that companies will need to report to. So this slide really covers kind of the implementation timeline for CSRD and includes kind of the scope of companies that will fall under CSRD and when. First and foremost, in 2024, so that's going to be fiscal year 2024, it will require publicly listed companies with 500 or more employees within the EU, including those that already fall under NFRD, but extending beyond it. So again, that 11,700 companies that are currently reporting to NFRD will be extended to a new group of companies, and then the requirements to be reported to will also be extended. It's estimated that over 3,000 US-based companies will fall into this first line category. So that's important to note if you're a US-based company tracking to CSRD. Second in line are going to be all non-listed large EU companies and EU subsidiaries of non-EU companies. And so this next category, which will come into force for fiscal year 2025, lays out criteria to determine what a large company is. And so that criteria, essentially, you can see on that white box on the slide, and companies will need to meet at least 2 out of the 3 criteria. So if you're just checking off one criteria under that set of 3, then you will not fall into the 2025 category, but you probably will be falling into the 2026 category. So those 3 criteria are 40 million in net turnover, 20 million in total assets, and 250 or more employees. And then of course that's in euros. So in fiscal year 2026, the third group in line are going to be all listed undertakings, including SMEs, and also including small credit institutions. Publicly listed micro enterprises are excluded, by the way, but that really is just a category of companies with less than 10 employees or below 20 million in turnover. Listed SMEs will potentially, I should say some listed SMEs will have an avenue where they can potentially defer reporting for up to 2 years, and we anticipate that additional guidance will essentially be released on this. Importantly, in fiscal year 2028, that fourth category is going to include non-EU parent companies with substantial activity in the EU. And we'll get into what that activity is in the next slide. I do want to quickly mention that there are certain entities that are considered to be of significant public interest for reporting, and those types of entities include financial institutions, insurance companies, energy companies, transportation companies, and kind of a broad category that says other entities that are determined to be of interest. And so what that tells us is, you know, different types of organizations will be added to that list in time. Okay. So we actually have another, and this will be the final audience poll, and then we're going to get into a little bit more around the CSRD in a moment. So for this one, you know, just looking to see for your organization, do you know when you will be required to report? And, you know, this is anonymous, so don't feel any pressure. If you're not sure, you're not sure, and answering honest will help us to potentially provide more guidance as this moves forward. Okay, great, I can see this, the voting is slowing down a little bit. We might just give a few more seconds. Okay, I think we can go ahead and close the poll. All right, so 34% say that they are not interested, so that's great. I hope today we can provide a little bit more clarity. 26% say their company will not be required. 15% in the latest category between 2027 2029. 13%, so large companies with subsidiaries in 2026, and 13% will be reporting in the first group. Great. So for the group of non-EU companies, as I mentioned, there's a pretty significant set that will be reporting in the first group, and it's estimated that over 10,000 non-EU companies will be required to report to the CSRD in the coming years. The specifications on non-EU companies that did not meet the categories that I previously presented in the other slide basically may be required to report in later years if they follow the next set of requirements. One is having net turnover of more than 150 million euro in the European Union in each of the last 2 financial years. And in addition to that, also having at least one large or listed subsidiary on the regulatory markets in the European Union with more than 40 million net turnover. And so in addition, small and medium-sized undertakings that are subsidiaries of US-based companies with debt or equity securities listed on regulated markets will be included. It's worth mentioning that in addition to companies that fall directly within the scope of the CSRD reporting requirements are the broad group of companies that operate either upstream or downstream within the value chain of companies that are required to report. And because of operation within the value chain, it means that those sets of companies will get rolled into the reporting requirements in one way or another. And what that might mean for many companies is that it will translate into reporting requests coming from their clients or customers, depending on where they sit in the value chain. And the reason for this is because the CSRD is broad. It's more expansive than climate-related financial disclosures, which we've seen in the G7 slide at the beginning of the presentation. And it really is around companies disclosing material issues, both from a financial and material impact perspective. And because of this, companies will be needing to report on their value chains and reporting on interactions and data with their value chain partners. So we want to cover some of the core mandatory reporting topics under the CSRD. I think the first one is double materiality, and so this really informs the scope of reporting, and we'll get into an explanation on what double materiality is in the next slide. The second, as I mentioned just a minute ago, the disclosures are broad. So they are broad around ESG topics, and there also will be sector-specific standards that the ESRS is anticipated to be finalizing in 2024. And so the disclosures are just going to be broad in scope compared to, what we see going on in the UK, what we see going on in Canada, and what is proposed in the US. Scope 3 emission reporting is at this point with limited guidance released from the EU, dependent upon the materiality assessment. And that's to say that Scope 3 emissions is required unless the outcome of the materiality assessment determines that it is not. There's some confusion around this just because Scope 3 emissions generally represent around 11 times a company's operational emissions, so the Scope 1 and 2 emissions. So it's a little bit unclear the dependency here on the materiality results, just because they do tend to be quite significant. Also, the outcome of a materiality report doesn't typically look at scope 3 as its own category, but scope 3 emissions would be embedded in the material topics that would be the result of the materiality assessment. That's all just to say that we think scope 3 emissions is actually more important and will more likely than not be deemed important through just the topical issues that will come out of a materiality assessment. One of the other big changes is that, in sustainability reporting, looking backwards at progress has tended to be, the scope of information that's been reported. And the ESRS has, required metrics and KPIs that certainly represent performance looking back in time, but it also includes forward-looking reporting. So reporting on, efforts going forward, targets that have been made and should be made, and progress on those targets. So the other major change is around the assurance topic. So assurance has been something that has been optional and recommended in the voluntary space, but never really required. The CSRD requires limited assurance with a transition to reasonable assurance in 6 years. And it's worth noting that out the gate, the limited assurance is really only around certain topics, so it doesn't need to be the full scope of reporting topics within the report, but then the scope of topics covered will also, increase in time. And then finally, the format of the report has some requirements around it. It needs to be reported annually. It needs to be an integrated report. And interestingly, it has to be digitized such that it can be scanned and the data absorbed electronically. So in other words, they don't want human eyes and human interpretation on the data. They want to be able to scan and digitally consume the data across companies that are reporting. So we mentioned double materiality, and this has become a large focus recently with companies seeking to understand if their current materiality assessment process is sufficient, and also simply just to understand, what does double materiality mean? So in its essence, double materiality is a concept which provides criteria for determination of whether a sustainability topic or information has to be included in the undertaking's sustainability report. So that's a must, not a, we may include it, we may determine that we don't want to talk about that issue, so we're not going to include it. And the approach is really marrying two industry approaches that many of you will be very familiar with, particularly with the reporting on GRI and SASB. So GRI materiality is really called impact materiality, and it's a look inside out. So really looking at those material topics that represent a company's most significant impacts. And those impacts are, looked at across the environment, the economy, and we say people or society, and that includes, social issues, it includes human rights, it includes labor. SASB takes more of an outside-in approach, and in its kind of financial materiality approach includes really the material topics that you find in the standards. And so those are deemed to be the issues most relevant to financial performance within the industry. And so there's another distinction that I think gets lost sometimes when we talk about double materiality. SASB's approach is really an industry level approach on financial topics that are critical and important to that industry. GRI kind of asks organizations to carry out a materiality assessment to determine the specific impacts that are unique to their organization. So the approach under the CSRD is really kind of merging those, and they say a union between impact and financial materiality. And essentially what that means when you drill it down to the ESRS requirements, it is whether a sustainability topic or information meets the criteria of the impact perspective, the financial perspective, or both. So in the end, this should result in a more comprehensive set of topics that a company must report on, because remember, that requirement is that the double materiality process informs what must be included in the report. Okay, so we talked about the ESRS standards, and this slide is really just so that you can have a glance into what they specifically are. So you might recognize this list, especially those of you that are GRI reporters, and it might look quite familiar. So the 12 ESRS standards that were launched in July of this year are organized under general, environmental, social, and governance sections. And these really represent the suite of standards that first group of reporting companies will need to prepare data for. Importantly, in the next year, the sector-specific standards, which EFRAG is already in the process of developing, will be released. And the anticipated timeline for that is really around the same time next year that this suite of ESRS standards came out. So that's kind of the June-July timeframe. In addition, EFRAG will be developing SME standards. So for those on the call that are supporting sustainability within a small or medium enterprise, you can you can at least rest assured that you will have a shorter set of requirements to report to. And I know from working with many SMEs reporting to, GRI or CDP, there's often a lot of questions of, why is this question being asked of us? We're too small of a company to report to this. And so I think there will be a lot of attention on the development of these SME standards. And, as practitioners, we sure hope that they kind of get that balance right. I want to talk a minute about ESRS and GRI, because we mentioned that list of standards looks, probably quite familiar for those of you who are familiar with the GRI system. And there's this word that has been coming up around interoperability. And so I want to touch on that for a moment. So interoperability really refers to the ability of a system to work with or use parts and components of other systems. And in the case of reporting standards, interoperability can be achieved by using common definitions, metrics, reporting formats. And really the intent is that the data can be shared, aggregated, and analyzed seamlessly and understood across a common language. So there's a number of kind of benefits around achieving interoperability between frameworks and standards. First, really the burden of reporting to different standards is greatly reduced. It really improves the comparability of sustainability data and makes it easier for investors, regulators, other stakeholders to be really informed and to be able to kind of compare apples to apples across companies and jurisdictions. With ESRS and GRI, this kind of principle of interoperability, I think, has really been taken up by EFRAG in the ESRS standard development process. So importantly, existing GRI reporters will be pretty well prepared to report under ESRS. And it's worth noting that entities reporting under ESRS are considered to be reporting with reference to GRI standards. And that's just like a baseline, fact. If you are using ESRS, you essentially can be considered to be in reference. For those of you that are already reporting to GRI kind of in accordance to GRI standards, then it's great to know that EFRAG and GRI are working together on a digital taxonomy that will allow multi-tagging, within your report, and so you can keep that GRI in accordance distinction. And then importantly, ESRS 1 and 2, which are the general requirements, allow inclusion of disclosures from other standards, including GRI. So there's really kind of a formal space within ESRS for companies to, really report the full scope of information that they report according to GRI as well, and to kind of keep that principle of interoperability. So this type gets into some of the specific distinctions between GRI and ESRS. And so I think one of the big things is that GRI is kind of recommended voluntary, and then there's certain topics that ESRS is, really requiring that they get reported and get reported in a certain manner. So, besides the distinction between impact materiality and ESRS requiring double materiality as kind of the initial kind of assessment process, there's also the distinction between target information. So GRI kind of recommends that companies report their targets, and this is required under ESRS. Another interesting distinction is the specific reporting requirements around emissions intensity under ESRS requires a monetary unit. So that means, for example, company must report metric tons of CO2e per monetary unit. GRI doesn't specify the units used in its emissions intensity reporting. And I know for those private companies that typically do not publicly report revenue, but that will fall under the CSRD, I think for that group, there's, a sense of unease about this requirement, just because private companies typically, are not as forthright in communicating their revenue as public companies are required to do. So this is a change, and it probably is one to kind of start socializing your internal stakeholders to now, just because we know that this is the sort of thing that, requires CFO, CEO, and board, buy-in. Maybe one other thing just around the differences between the two is just around kind of entity-specific disclosures. It might be worth taking a look at these as well with regard to what I mentioned around internal socialization, around the requirements. So GRI really takes a recommendation approach, but some of the required entity-specific disclosures might also fall into that category for certain private companies of essentially information they do not want to share. So it's worth taking a look at these entity-specific disclosures and just getting a sense of internal appetite to report on these. Okay, so we're going to kind of move from the European approach and take a look at kind of this huge evolution that's been going on in the voluntary standards and framework space. And, and this is really around this convergency to the International Financial Reporting Standards Foundation, which I'll be calling IFRS from here on out. So we mentioned in 2021, the G7 made a commitment on regulating climate-related disclosures. That happened, I think, in summer 2021, and then that fall at COP26, the signatories to the UN Framework Convention on Climate Change approved the mandate to create the International Sustainability Standards Board under IFRS. We've also seen the consolidation of the Value Reporting Foundation and CDSB, the Climate Disclosure Standards Board. So the objective of the mandate of the creation of ISSB essentially was to increase harmonization and comparability. The ISSB's work was intended to establish a global foundation of a common set of sustainability language, definitions, and reporting standards that would essentially form the bedrock from which country-level standards would build their own requirements. The ISSB standards are intended to meet the comparative and transparent information needs of investors, facilitate interoperability, and really set out not just narrow reporting requirements, but comprehensive sustainability disclosures. Importantly, and I think this is something that really speaks to the prominence that we will see ISSB taking in the future. The ISSB is under IFRS, but sits alongside the IASB, another acronym. This one you can forget kind of soon because you know, if you are a sustainability professional and not an accountant. So the IASB is the International Accounting Standards Board, and by the way, set the same foundational groundwork for financial accounting globally in the past decades. And so the development of the ISSB standards has really kind of integrated the approach that IASB took in setting global financial frameworks. And that essentially kind of that same approach was taken with the ISSB standard development. Now I say that, but I also need to mention that the ISSB standards were also created essentially consolidating the content from TCFD, from CDSB, excuse me, and SASB, amongst others. And so from a content perspective, what we've really seen with the ISSB standards is really a movement of these different standards and frameworks, TCFD, SASB, into one system. The first set of standards were launched in June of 2023 of this year, with an effective date in January 2024, essentially in line with companies that will be reporting to CSRS and under other jurisdictions. Those two standards are using the IFRS acronym, by the way, and so it's going to be IFRS S1. Those are general requirements, and S2 are the climate-related disclosures that, as I mentioned, have really taken up, you know, from a content perspective, requirements from these other systems. For countries that have proposed rulemaking, but do not yet have mandatory reporting in place, so USA, Canada, looking at you, the ISSB standards are good to become familiar with, and really offer, you know, a good guess as to what will be taken up from a regulatory perspective. So really that S2 standard. Okay. All right, so ISSB and SASB. So in 2022, ISSB assumed ownership over SASB's 77 industry standards, and you know, this really occurred with the consolidation of the Value Reporting Foundation. This means that ISSB will direct the evolution and the enhancement of SASB 77 industry standards, and essentially those standards will undergo a revision process, you know, with a really thorough due diligence and stakeholder process with it. And we do understand that this is ISSB's immediate priority. In fact, they've just closed public comment on a methodology for developing a SASB taxonomy. And this is aimed at kind of improving that interoperability that we kind of talked about between ESRS and GRI. So you can look forward to perhaps what will be a SASB-oriented taxonomy and a GRI-oriented taxonomy, you know, coming online in the near term. We do expect that this taxonomy will be finalized soon, maybe as soon as January, in line with you know, the reporting requirements under ESRS. And the other thing to kind of keep in mind around this SASB revision process is that, you know, soon we will be losing an acronym here. SASB as an acronym, you know, will go away. The 77 industry standards, you know, might change in number, but they will be integrated into the ISSB system, and we'll have that same IFRS acronym that we just saw with the first two standards that were released this year. I know I mentioned, that companies in countries that are anticipating regulation, could benefit from looking at the ISSB standards. I think the other message here is that, these SASB industry standards, are essentially going to be made more international. They will be used across different jurisdictions in their next iteration. And so beginning to become familiar with the SASB industry standard that applies to you is a really great way to become prepared with the forthcoming, not only regulations, but the forthcoming, ISSB industry level standards. Okay, so back to Europe for a moment here. So we mentioned, ISSB is really going to be taking that SASB industry standard approach and is going to be working on revising those standards in the near term. EFRAG is also in the process of developing their draft ESRS sector standards, and those are anticipated to be launched in June 2024. One thing to keep in mind, of course, is that, those ESRS sector standards are going to be informed by adding impact materiality as well. Because SASB has said that they will adopt, because ISSB has said that they will adopt SASB's industry approach, one thing that I think we're not so clear on is whether the ISSB revised industry standards will take kind of a financial materiality or a double materiality approach. I think, there's some opinions that they will keep the financial perspective, but in the revision process, there could be some informing of impact materiality. We'll see. Regardless, the EFRAG and ISSB have communicated commitment to work on guidance to support navigating essentially, the two different standard systems and understanding where there are incremental disclosures required by only one set of standards. So where those incremental disclosures will absolutely occur at this point in time, from what we do know, is really going to be around that kind of impact materiality approach. It's really just a matter of the extent of that, but we know that's a major area. Okay. So we've talked a lot about these large evolving standard systems, and we can't have this conversation without talking about CDP. CDP is the largest environmental reporting platform globally, and while they're not a standard setter, they do design their questionnaires to capture core topics, from a lot of the standards and frameworks that are out there. There's a couple of exciting and new things that are happening with CDP. First and foremost, I want to mention that they've communicated a strategy up to 2025 that includes adding to the existing kind of 3 topics that the questionnaires cover today, climate being, the most commonly used questionnaire, forests and water security. In 2024, so next year, they'll launch the newest questionnaire, which will be on plastics, and there's other kind of topics that they have planned out up to 2025. What's really important for this conversation today is that in 2024, CDP is going to be integrating ISSB standards, so IFRS S2 climate disclosure standard into CDP's climate questionnaire. So we've become used to CDP climate being aligned to TCFD. And in the kind of integration of the IFRS S2 standard, I do not anticipate that we'll see major changes, only because TCFD had really strongly been integrated into the IFRS S2 standard. However, it is something to keep an eye on. And for CDP reporters out there, it's even more of a reason to just become familiar with the ISSB standard. Okay, so we are finally at the USA and the proposed SEC rule. We are tracking to publication of this rule. The timeline has essentially been kicked back quarter by quarter. Right now, the signal is that a rule may come out in Q4 of this year. It also may get kicked into Q1 or Q2 of 2024. We do know that there has been progress kind of behind the scenes. And so what we want to do today is cover some of the distinctions between the US SEC rule and what we talked about with the EU CSRD. So, you know, the main message here is that it's a more narrow rule. First of all, the scope of companies is much more narrow. This will only apply to SEC registrants, so publicly listed companies. It will not include any private companies, and there is likely to be pretty significant guidance to exclude certainly micro enterprises, but we might see more extensive exclusion for SMEs. The scope of the information is also much more narrow. It really is a climate focus. So it really is going to be more related to TCFD, obviously includes GHG protocol with reporting on emissions. And again, you know, I think alignment to ISSB's climate standard as well is something to look at. However, with that said, there is no mandated standard development at this time. That was in the proposed rule. However, I will say that the SEC has been participating in ISSB working groups, and so this is just really signaling that the rule will be looking at, you know, an intention of interoperability, similar to what we have in the financial reporting space. So that's quite important. But again, there's no communication at this point in time of specific standard. Scope 3 has come up as a big question. Is it going to be included? Is it not going to be included? We know that it will not, its inclusion will not take that materiality perspective that's taken in CSRD. And some assume that it actually will not be in the initial rule. And that's just because there's been so much stakeholder comment around divergence between methodologies and then just the cost both in time and resources for tracking Scope 3 emissions annually. We'll see what happens there. And then, you know, because the SEC rule is really just climate focused, there's just no topic around materiality, much less double materiality. Okay, great. So that actually wraps up the content, the kind of technical content of the webinar, and I'll pass it over to Megan.
Awesome, thanks, Bonnie. With all this information in mind, what are some good next steps or areas of focus for your company? So for double materiality, additional guidance from the CSRD is forthcoming, which should be a little bit illuminating on what exactly you'll need to assess to achieve that double materiality requirement. And then just a baseline assessment, what information is your organization already gathering? What gaps do you have? And then your greenhouse gas footprint, obviously scope 1 and 2 are critical, potentially scope 3. And moving forward, this is going to be critical no matter where you are located in the world. And then for TCFD, it's obviously underpinning so much of what we discussed today. So any familiarity with TCFD requirements will be super helpful. And then for SASB, what is material for your industry? And you know, if you're in the EU, to prepare for those ESRS sector standards. And then ISSB will be super useful to benchmark current reporting to other relevant standards, especially for the US and Canada as things evolve. Awesome. All right, once again, thank you for joining us today. The presentation slides along with the recording of the webinar will be sent out to all registrants and attendees within the next 24 hours. We have about 9 minutes left, so we'll use this time to answer some of the audience questions. If your question does not get answered, we'll try and get to those following the webinar. However, please feel free to contact us with any questions directly. Our contact information is provided here.
Great. Great, and I'm really enjoying seeing the questions that have come in. I know we've got about 10 minutes. We have a long list of questions. Luckily, we have the names of each person that asked the question. So if you have asked a question and we are not able to respond to you within the time that we have left, we will get a response to you. We might need to, yeah, I think with your registration, we will have your email. So, so if you have asked a question, you will get a response from us immediately or over email. I'm going to start with the first one that I see here. That I think is a really great question and will perhaps provide some clarity. This is from David Byrne, and the question is, if my company is in scope for EU CSRD, is reporting to GRI or ISSB an option, or is reporting against the CSRD a requirement? So yeah, and I'll just say, when we say the CSRD, we're talking about the CSRD as, you know, kind of like the legislation, and then the ESRS, that's going to be the standard or the set of the 12 standards that we looked at earlier in the presentation. And so the basic answer here is that you will be required to report to the ESRS. So that is going to be the requirement. If you use the GRI standards currently, you can continue to do that. And the ISSB standards will help you to maybe organize your reporting, particularly if you are a company that is reporting from outside of the EU, but subject to the ESRS. How can we confirm if we are required to report? If this is something that you are unsure about, you can do a few things. You can look at the requirements and kind of what I went over in the slide, and really look at those requirements around revenue, turnover, size of your holdings in the EU, or size of like your business operating in the EU. You can also contact, you know, a advisory group like ourselves, and we can help you kind of navigate that. So if you are having some issues, you know, kind of figuring out where you fit within the requiring rules, but you have a pretty good sense that CSRD is going to require your company to report at some point in time, it's best to figure out when that is as soon as you can, so that you can kind of build those systems and prepare for reporting. Yeah, okay, let's see. We've got another one here. There's so many good ones. Okay, this one, as an international company with no large or listed company, but substantial activity in the EU, would you recommend to start with the GRI standard and later add ESRS specific topics, and do a double materiality assessment when we're required to? Or should we already start reporting under ESRS, as there is now the agreement between EFRAG and GRI? Great question. So let's see, an international company. So I'm not sure where you are located, but you're not within the EU. So first and foremost, I would say, you know, look at where you are located, and if there are any, you know, proposed requirements, you know, in your current jurisdiction. You know, so for example, if you're in the UK, you would have the climate related financial disclosure regulation to follow, and also the EU's CSRD. So where you sit within your own jurisdiction, I think, is very informing. If you are so it sounds like you're a large company and you have substantial activity in the EU. So I think the second thing is to understand, that substantial activity, where does that put you in terms of the fiscal year that you are required to start reporting? And that's probably important to understand, like how much time you have to kind of build your systems. It does sound like you will need to undergo a double materiality assessment, but it might be worth understanding like when you need to do that. Is it next year? Is it in 2 years? And then, you don't need to start reporting to ESRS until you're required to, but again, becoming familiar with those standards. So one way to do that is to carry out kind of a gap assessment of your efforts to date, and to really kind of benchmark your existing reporting standards to the ESRS and understand those differences. So doing that now is something that will help you just kind of build out your reporting efforts in time to then be able to roll into the mandatory reporting without any issues. And obviously, benchmarking is something that you can do internally. Gap assessment is something you can do internally. You can also call upon your trusted advisors to do that as well. Okay. Let's see, we've got somebody asking here the definition of SMEs, and I'm really glad that you're asking that. I'm going to actually go back to the slide where we talk about this because I have, so there's actually some initial kind of requirements in the CSRD around SMEs, and there's just not enough time for us to present everything on the webinar. But if you are an SME and you think you are getting rolled into the CSRD in time, the good news is you do have some time. So the first group of SMEs will be included in will report fiscal year 2026 data in reports that are published in 2027. So you've got a few years to get prepared. Now, what is an SME? So what are the size of companies that are going to be included, in that? So again, we noted that micro enterprises are not included. So micro enterprises are employees of 10 or less. A small enterprise is 50 or less, and a medium enterprise is 100 and less. There are some additional kind of financial requirements that I don't have in front of me, but if you, are wondering about those, please reach out and we can give you more information. Let me just go back to the final slide. You can jot down my email address, and also we'll be sending these slides after the presentation. Okay, and I see that we're pretty much at time, but will a slide deck be made available after the webinar? Yes, we will be sharing the recording and the slide deck of the webinar immediately after. Let's see. I'm just seeing if we can fit in one more question here. Let's see. Okay, if there are many European entities within the group, how do the criteria for large companies apply? Do they apply for each separate entity? That's a great question. So the way the CSRD is set up is that the parent company can report across all entities, and where the parent company does report across all entities, those separate entities do not need to essentially duplicate reporting. So it's for the person that asked this question, or companies that this applies to, it certainly is worth starting those conversations across different levels of ownership, so that there can be kind of a common understanding of whether the parent company will be covering the ESRS requirements directly. And I think that is the last question that we have time for. So I think to wrap up, thank you so much for really a great level of and really wonderful questions. Oh, one more. Could the definition of SME change in different regions of the world? Yes. The definition of SME, could theoretically change. I think in terms of what we talked about a few minutes ago with regard to the ESRS, like if you are an SME, located, let's say in Brazil, but you will be required to report under the CSRD, it's going to be the EU's definition of SME that will be applied. So while you might be familiar with a different definition, it's really going to be, under the regulatory environment of the EU that's going to set those requirements for reporting. Okay, so with that said, I think we'll wrap up the questions, and I thank you all very, very much. We will be sending out the slide deck and the recording of the webinar shortly, and we also want to take a moment to just flag that we do have another webinar coming up at the end of Climate Week. So at September 27th, we'll be hosting a webinar on really focused on science-based targets. And we look forward to some of you being able to join that webinar as well. All right, thank you, and thank you so much, Megan.
Awesome, thank you everyone for attending.